Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An indecisive spinning top yesterday, possibly a shooting star pattern, a pattern that is usually seen as bearish. This after the previous session's bullish thrusting pattern and bullish opening white Maribozo. After a pause at the end of 2 weeks ago and the start of last week, the market has overall this week tried to resume its decline. The move down below the dark blue broken late February to early May uptrend saw to that. It seems a congestion below at 111.39, dating from March 2020 and December 2023 high, both at the same level, eroded the very recent bearishness, and we've pulled up a bit, but not far enough to repair the break below the dark blue uptrend. Further down, we have congestion right now between 109.33 to 109.73, consisting of two necklines and the 50% Fibonacci line of the January 21 to September 22 move at 109.44. Overhead, we have the July 23 high at 112.76. Then above that, nothing dated until the June 2020 high at 114.22, apart from what the market has created during mid to late April and early this month. Finally, as I've said previously and repeatedly, we are now set up with just 4.5 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we're beyond. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of this year will be, just that we are set up to achieve one. So far today, a move higher but still within yesterday's range. Cable, aka sterling against the US dollar. An immediate countering bearish harami yesterday, if only just, after the previous session's bullish engulfing pattern. Prices were interestingly capped by the purple neckline, currently 133.71, of the small but influential mid-November to early December 24 reverse head and shoulders continuation pattern, and influenced on an opening basis by the March 22 high at 132.98, whilst the August 24 high at 132.65 eroded any bearish incentive, with prices closing just below this and just above the bright pink neckline, currently at 132.34 of the small and possibly dubious mid-April to early May base head and shoulders top. A little farther above, we have the hugely significant September 2024 high at 134.34. Okay, so I've repeatedly asked you to keep an eye on this September 2024 high at 134.34. The reason being that now prices have exceeded that level, if only just. They are now set up for this market to make that rarest of patterns, a possible annual key reversal. This pattern has already been set up on Eurodollar. Thus, if we close on Wednesday, the 31st of December 2025, either over 134.34 or under 122.96, then we'd be on. Anything in between, we would have a lesser outside year pattern. I am at this stage not even going to contemplate what the result at the end of the year will be, just that we are now set up to achieve one. In the meantime, it is worth noting that overhead we have the September 2020 high at 134.83 and the 2019 high at 135.16, which are part of a congestion area between 134.83 to 136.43, containing congestion at 135.81, 136.21, and the February 22 high at 136.43. Whilst below we have the July 2023 high at 131.44 and the December 2020 low at 131.33, which held up the market at the start of this week. Now, so far today, a small reactionary move back up, but capped by the March 22 high and supported by the influential 61.8% Fibonacci line of the June 16 to September 22 move at 132.46. US dollar against the Japanese yen. A second bearish black crow and a follow-on lower from the previous session's immediate countering bearish harami and bearish opening black Maribozo. Perhaps the most interesting feature was how prices once more closed back down below and within the big picture bearish item the bright red July 24 to January 25 bearish Andrews pitchfork with the bright red upper tine now once more back above, and that's currently at 146.92, and the middle tine below, currently at 131.63. This pitchfork has shown and continues to show the bearish angle of attack of this market. There's also another pattern, or potential pattern, I'd like to know, and that is the whole February to date action being the whole mid-January today as a possible descend, even the whole mid-January today action as a possible descending, expanding wedge pattern, with the bright red upper tine making the upper trend line and the pink lower trend line. The pink lower trend line currently is at 136.63 of the well highlighted early February to late March descending wedge pattern, making up that lower trend line. Price also closed back below the green short medium moving average once more, currently at 146.39, and we are still within the unhighlighted late April to date expanding wedge pattern, currently 142.69 to 149.33. I have my doubts about this last pattern, but it's still nevertheless there. So far today, a move lower from the open towards the 50% Fibonacci line of the January 23 to July 24 move at 144.58. US dollar against the CNH, the offshore Chinese yuan. A reactionary bullish white soldier yesterday after the previous session's indecisive spinning top. That had actually been the lowest low since early November last year. The market seemed and seems today also to be capped by the flatlining gold long moving average, currently at 722.22, and supported by the combination of the dark blue neckline, currently at 719.5, of the late August to early November 2024 reverse head and shoulders pattern. Also the May 2020 high at 719.64, and the 50% Fibonacci line of the September 22 to April 25 move at 719.91. For the life of me, the last week and a bit's actions do look like a hesitation, however short or long, before a further move back down from the very significant highs seen in April. You see, below this support combination, we seemingly have little until the Fibonacci congestion in the 714.48 to 714.95 zone. Whilst topside, well, we have all those moving averages. And so far today, nothing much around yesterday's close and under yesterday's high. US dollar against the Brazilian real. A counter to the counter bullish Harami and bullish closing white Maraboso yesterday after the previous session's immediate countering bearish opening black Maraboso. This came at a crucial time as the market had pierced the key 560 even level, as well as the shallow bright red lower tine, currently at 563.26, of the mid-August 24 to early April 25 bullish shift pitchfork, and the recently finessed purple May 24 to date uptrend, currently at 562.59. Indeed, I don't think these, apart from maybe the 560 level, may be that good as supports, and it wouldn't surprise me to see them being tested again and soon. Overhead, we have capping the market what was once the significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. Finally, please bear in mind that we have a monthly key reversal down here for April, and that all things fall within the shadow of this market and this pattern. US dollar against the Mexican peso. An indecisive spinning top pattern yesterday, but one with the lowest low and low close, lowest open and lowest high since mid-October last year. This after the previous session's counter to the counter bearish engulfing pattern and bearish opening black Maraboso. The market continues to make its way lower after a hiatus over late April to early May, down through the support between 1940.68 to 1936.27. Further down is another support zone between 1915.03 to 1920.38, made up from the 50% Fibonacci line of the November 20, April 24 move and the March 2020 low respectively. This is all still an overall follow and lower from the overhead, very wide congestion band that eventually became a rectangle top pattern and is centered on the September 2022 high at 2057.65, stretching roughly between 2017.20 up to around the 2083 even area. It's also worth bearing in mind that April became a monthly key reversal down. So far today, well, not much, with prices seemingly caught in the 1940.68 to 1936.27 congestion right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.